Hey guys, welcome to the class. If you're watching the pre-recorded class or the post-recorded class, welcome. We have been going for a little while here, but you have not missed much yet. I'm gonna be today answering a couple of things in the question area or in the pre-recorded section area. Class recordings channel, you can go into the class recordings, watch any class, and then ask questions. There's just right click on it to create a thread on that video, and I'll be answering throughout the week. All right. Other than that, let's get to the quick analysis, and then I'm gonna get going with technicals. Today is Thursday's advanced class. All right, talking about dominance. Dominance, I was telling you guys that this is worrying to me. We still have two redemption zones or two redemption possibilities. I'm gonna be talking about that in a second. But what I would rather see, it is having some more air here, right? Like having air between the trend line and the dominance. Almost, let me show you, almost like we did in here. You see how we grabbed some air and then we did a little wrench and then we fall back down, right? And we almost never lost that trend line. Yes, we lost it here, right? And then we did the little wrench there. So, man, I don't know. I'm just not prepared for to see that wrench just yet. The redemption zones or the redemption possibilities will be a V-shaped recovery and then create a somewhere around here a high, hold this area, make a tiny bit flagging here and push with a next high somewhere around those areas, right? Somewhere around 63%, 62%, nothing below 61.5. So that's what I'll be looking for, the first redemption zone or first redemption parameter. And the next one, less ideal, would be going here, not rejecting, all right? Not rejecting, just holding here and then keep going upwards. But right against that trend line and then breakthrough retest and off we go and then keep going for a little bit higher. Still, we need to integrate dilution. What does dilution means? It is, all right, the percentages, right? Back in the day, right back down here, how many altcoins there were? Like how many shed coins, right? How many meme coins there were back in the day? How many altcoins, how many shed coins, how many meme coins we have now? Right? Remember, everything as a whole is 100%. So if there is more of something, there is less of the other thing. That's how percentage mean. Doesn't matter if in real terms they both are growing. All right. Daga, thank you so much for that. I really appreciate sending that picture. Let me also bring it up here on the class recording. Perfect. So you can see what you locate the classes there, pre-recorders, recordings. That is what might be happening at this point, right? We might have a ton of new coins. Dilution might be pushing into how I'm expecting to see things. But nonetheless, we need to keep an eye on dominance. Why? Because a drop like that and Bitcoin price keep going up usually indicates Bitcoin might be running out of steam and we might be seeing altcoin season starting. I mean, come on, let's take a look at TRX, right? Let's take a look. I mean, just look around you. Everything is just pumping. By the way, guys, if you're planning to short, not financial advice, but I will not be shorting unless I'm on the 15 minutes, on the 5 minutes, or in the 1 minute charts, which at this point, I don't know. That'll be a hard ball to throw, right? Let's go now to SPX, and then I'm gonna go back to Bitcoin. SPX, guys. I mean, we've been nailing it. I know if you haven't been here for a long time, or if you're new, you might not recall the analysis, but we've been nailing it here. Let's also call something like I was expecting a breakout retest. Did we retest it? Not exactly. I mean, in fact, the retest was way faster than I was expecting, right? I mean, let's zoom into that. It's not about the breakout, right? It's about the retest happen like that, almost like non-existent, all right? And then off we go. I mean, technically speaking, we did have the breakout retest, not as I was expecting it. Nonetheless, the analysis played out very, very nicely. I'm a little worried about this one too. Let me show you why. I do have it prepared, so you don't have to wait too much. And, well, it seems like I don't. All right. Whatever, let's just draw it, let's just handily draw it. I'm gonna be grabbing from the time that we actually break above the dynamic reactor and measure it. I'm also going to be grabbing from the time we actually broke from the dynamic reactor and measure it till the next retracement. Or you know what? I mean, it just keeps going. And then oh, here we go. From the time that we completely break and from the time that we completely break. I know what, they were just hidden there. All right, perfect. So this line that we have going on, let's compare them. Remember, far right, it is the current one. The next one, well, it is, there we go, it is lower, right? Yes, we can expect a contraction and movement in the markets, but I don't know. I think we are over pushing it at this point, right? So I'm not talking about how far right. I'm talking about how far up we're moving here. So the discrepancy between this area and this area might be something about around that, right? And yes, we could be expecting the same movement, but really, I mean, really? I just don't see it happening. I mean, yes, we're December. Things should be slowing down a little bit right after December, maybe January, February, March. Just be prepared for maybe that pullback around those areas. But still, this is not feeling comfortable. This is going out of my comfortable zone. I would like to have seen a big retracement and then continuation like we did here already somewhere around these areas, but it's just not been playing out just yet. Still, we're gonna run with the narrative, right? What does the narrative is telling us? Everything is fine. Well, crisis is not here yet. Everything is pushing up, right? I mean, oscillator is also reflecting that. We can see money flow being stable, right? So let's just play with the narrative, knowing that at any point this could break, right? Just wanted to push that out there. Why? Because today it's advanced class, right? Now let's go over Bitcoin really fast and then wrap things up for the Q&A on the indicators. All right, Bitcoin bursting, right? Nice, bursting. Let's also, I don't have it at this point, but let's go over my class in here. Yesterday's class, we talked about this. You can go watch the recording. By the way, it's already up there. Let's go to yourself and then, or to myself. Let's go to, where is it? Reproduction list. Let's go to live classes. And then I think we got, oops, not this one. Let's go to the right, all the way to the bottom. Here we go, December the 4th, right? Yesterday. And let's see, maybe I got it right here. Yes, exactly. I was talking about what exactly? A possible goose head playing out right down here, right? Having a triangle here. And because of the goose head and the volume that we have pushing in, sorry, money flow that we were pushing in, which is part of the ribbon, right? We had this higher low that we were expecting, right? Let me show it to you. Here we go. We had the, oh, come on. We have the higher low, right? And right now we have, we need to go to 4 hours. There we go. Much better. We can see it now in detail. Let's hold on for it. Let's wait for it. Come on. Come on. You can do it, TradingView. There we go. We were expecting for this area right here. Remember, yesterday we were looking at the possible goose head scenario playing right down here. And I told you guys, because of this higher low and the goose head playing on right below the zero line, I was expecting to enter in a purchase right at the breakout. Right at the breakout, right? Right at the breakout, TP number 1 right here. And and then move my stop to entry. And then guess what? Also, let's remember here, half of my position. Remember that for me, one single position is at 3% of my wallet. All right, that's one position. When I do see things in a risky scenario, right? When not everything is pointing out at, yes, this is completely bullish, right? Or completely bearish. What I do half of an entry. I still want to push the other half, right? But when am I going to push the other half? I did explain it right here. Let me see if I can forward it to here. There we go. It's not about the breakout. It's about the pullback or the retest, right? It's about the retest. So my next entry, or if you miss your entry, I will be entering or re-adding to my scenario right down here, right? As we have the flip of the ribbon right down here, and then support at the zero line to then push back up to it. All right, I'm gonna leave my spaghetti there just so we can call it back for future reference, right? I'm still not gonna be updating it, so we can see how far off I was on timing. That helps me and that helps you, so I can shorten my times or expand my times as the speed of the market, right? So, but so far everything is just playing out almost to the step, right? Almost to the candle, not to the minute, but to the candle, right? So what's going to be my possible next entry? Right down here as we come back to this next support, if I found a rejection area, and then off we go. I miss Mexican Experience. I miss you, Rigi Classic. Long channel friend and personal friend also. Thank you, my friend. Um, so that's what I got on Bitcoin, guys. Remember, if you are coming from J Bravo, ask us about the things that you are interested on, right? Maybe we can take a look at Walmart. Maybe we can take a look at Seagate. Maybe we can take a look at a couple of stuff. We usually start with Bitcoin because that is the most volatile, more exciting around the crypto the crypto space, and our crypto community is very very big. But guys, please let us know. All right, GLD versus will be outstanding. All right, let's take a look at GLD. And then we move into a Q&A. All right, GLD. All right. So the gold trust. All right, perfect. Yeah. Let's add it here. All right, let's take a look at here. Let's get started first from the daily. Wow, this is the first time I'm looking at this asset, by the way, right? So I like to start big. I like to start out. I'm also going to be adding the Bravo kit just for reference on what you might be wanting to look for, right? By the way, guys, take a look at yesterday's class. I gave you guys my secret on how to use the indicators and how to get started and get going and be successful while using them, right? Please go watch yesterday's classes. It is, remember, on the class recorded section, right, at the end. Still, watch it whole. I'm in STX. Nice. Missing render. Oh, but you miss. What a move with render, my friend. Yes, what a move. All right, so the first thing I'm going to get going is not using the indicators, right? I don't need them at this point. I need to use and see what my brain considers and looks for, right? So the first thing that I see, and look at that, man, I cannot unsee that 7,816%. Holy Jesus. That's a very good one, Rigi. That is amazing. 200x, guys. By the way, guys, just so you know, Rigi Classic is an advanced trader and he loves to do like insane leverage, right? Insane. I don't know how he does that. I mean, other than balls of steel. But man, respect, respect. By the way, guys, be your own trader. Do not push into somebody else's style if that doesn't work for you. All right. I'm not against trying new stuff. I'm against ditching everything that you already know, right? Just to start all over again. So yeah, just letting you know, guys, there. All right, so perfect. I see the first trend line here, and then was my next maybe trend line. I'm gonna be doing this one up here, and also just adjusting it slightly. There we go. I think that looks okay. And finally, I'm gonna be doing one more recent trend line, which is this one here. Something important to note, it is that right now I am into a broadening wedge, right? Into a megaphone pattern. Um, and I also can see, and this is for my Bravo users, a what is it? What is this? That is a hair, a tree mountain. Hair and shoulders, yeah, head and hair. But hair and shoulders pattern, right? So we have a hair and shoulders pattern. Of course, we're trying to make that a thing, right? Help me out with that. I know it's a dad joke. Still, I think it's pretty awesome. So, kitty pattern, head and shoulders, head and shoulders. All right, we have a head and shoulders pattern here. And what could it be? Well, then we need to identify the neckline. There could be a couple of necklines here. I mean, depends on how you look at it. I like to go and wedge it between a low and a high. And from there, it's just pushing it, right? So for me, that will be my neckline. Yes, we can see a little bit of a fake out here, right? I could even go like this. And you might also agree with this one, which by the way, is just a slightly bit different, right? So don't worry about it. it doesn't really change the outcome of it, right? The important thing it is that we are right now making a lower, my bad, a lower high, right? We're making a high, lower high, right? Still above of the previous high, so technically we're still safe, right? But lower high nonetheless, right? Lower low, you see that? So now lower low, and this is what defines the movement. Are we gonna bounce from our support areas? Guys, look at that. I have not yet even used a single indicator, right? And I'm already have support zones. I already have a pattern. I already have a structure, right? I already have many things and in an easy peasy way, right? I mean, easy peasy lemon squeezy. All right, so now that I have direction, now that I have a clear picture, well, then this is exactly when I take out the big guns, right? Now that I have the overall direction, this is what I start asking my indicators. Hey man, it's your turn. Do your stuff, right? Do your thing. Let me know if my analysis is correct. Give me that confidence. Give me that confidence, right? Give me that light on the darkness. So the first thing I'm going to be pushing up is going to be my dynamic reactor. Remember, with dynamic reactor, I like to forecast it. Always forecast your indicators, please, right? So let's just grab it from right down below and then just forecast it as my wrist. Let loose that wrist. All right. And yeah, I mean, it's not exactly there, but it's still within the same areas right here, right? So far, so good, right? So let's just turn that off and look at how am I turning things on and then off. All right. Turning it off and then the next one turning it on. It might look the same, but the only difference in here is that I have my volume, oh my God, that is my quantum reactor, all right? So I'm adding in other indicators in in a different layer, all right? So I'm gonna also forecast it, and this is what might be telling me, well, I'm still above this one. So what could I see here? Let's do it. Let's do it. Now this is where you start forecasting your analysis. If I break this area, it's not about the breakout. So when I know it's going to be a retest, well, I have my first dynamic reactor coming in. It's not about the breakout. It's about your retest. And what am I going to be looking for? Flip of the ribbon to the downside, flip of the ribbon to the downside, and rejection of my previous area and opening short. Where to? Oh, look at that. Same area of my trend line and same area of my reactor. You see that? Beautiful. So we already are moving 3 steps ahead if we break below this area. All right. So this movement, I'm not going to be taking it. All right. I'm going to be taking the confirmation of the next upcoming movement. All right. So here is another thing that I want you guys to know. So I always prepare for plan A and plan B, best case scenario and worst case scenario, all right? So what will be the next case scenario? What we already announced for the bearish pattern. Let's analyze for the bullish pattern. What would that be? The bullish pattern will be breaking with strength here, bouncing, creating a higher low, so bouncing to the upside here, and also breaking a previous trend line, all right? Then rejecting your entry here as you have flip of the ribbon to the upside. You see that? And then off we go with 1,000% gains. All right. So to the moon. Guys, is that clear? Have we already seen how one single indicator in just simple steps have got us to preparing for the future? Let me know. If that's clear, perfect. Is this simple or is this complicated? Let me know. Easy peasy. There you go. Boom shakalaka.
Double kill.
Double kill. All right. So, guys, this is part of the training, right? So this is part of the classes. This should be joyful. This should be profits. This should be, yes, you're gonna get lost. You're gonna get stopped out sometimes, right? You're gonna get some losses sometimes. That's part of the game. But the things that you build up that confidence, right? So as you can see, I mean, these indicators are so powerful along with your brain. That's the key. Your brain, what you know, what you see. All right. So this is so powerful that they're adding on top of the most powerful machine that you got on your hands or on your head, which is your brain. So do not underestimate yourself. Build that confidence on yourself, and the indicators will help reveal the truth, right? So remember that the truth doesn't mean up or down. The truth usually means a perspective of what could happen, right? Remember that if you look at something from different perspective, right? You have two versions of the same truth, which is a market structure. All right. So just trying to get you easy going here. Then let's add a little bit more here. Let's not go too in depth in here, but let's for our Bravo friends, let's add our Bravo kit here, right? Bravo kit, it's a beast. It's a beast. And let me also start cleaning this up, right? First of all, you can see you can first have the 9 count here, almost perfect to the top, right? So, oh, look at that, beautiful. What was your calling section? Well, flip of the ribbon also, look at that, flip of the ribbon right there. Yes, it's slightly bit up, but if you draw your trend line, well, then you are up, you're up for a treat, right? There we go. So let's also hit that for a second, Control C, and then hide this. All right. Well, then what is it up next? We're in a downtrend. Right how we have, what is this? Can anybody tell me what is this line? You guys know this. You guys know this. This is being called out every single time. What is it? The 200 day. Exactly. We got the 200 daily moving average, right? And where is our reactor? Where is our trend line? Where is our megaphone pattern bottom? Right? Let's take a look at that. Is it like magic? Is it? Right? I mean, we had it from before. The indicators are telling us, hey, you know what? This is kind of like a slightly different perspective, but you're on the right track, right? So safely below, exactly, yeah. So there we go. So we start right there with the indicators, right? So let's just leave it like that so far, right? Let's just leave it like that so far. Let's not overcomplicate things. Don't worry. As Rigi, if you can, please confirm or deny, right? Over time, you're gonna build that confidence. You're gonna build your style, and you're gonna pick and choose those indicators that work the best for you. And man, you are gonna become your best version of yourself, right? Remember, this doesn't come overnight. Is it easy? Yes, when you know what you're looking for, right? But we need first to build up that clearing the path, right? To see what or to seek for what we're looking for. Next thing that we might be doing, and let me explain this with clarity. It is a failed pattern, swing failed pattern, or break of a trend line, right? Let's do that right away. Let me show you. Let's leave this spaghetti here for a little while. But all right, just like remember we do based on trend lines, right? Just like breaking a trend line, it's not about the breakout, it's about the retest, and there you go for your first support, right? And you took this short, right? Same thing happened the other way around. You do your trend line, sweep of the lows, double or triple bottom. You see that? It's not about the breakout, it's about your retest. Off you go, you are above the zero line, and boom, that is your for short trade. You see that? All right, easy enough? Easy enough? Let me know. Was that easy enough? Yes, perfect. All right, let's move into the next thing, guys. This is one of the most important things that I want you to like beg into yourself, right? How do you know? You never know, but you know what you're looking for, right? Just like when you're searching for gold, do you know there's gold in there? No, that's why you're searching for it, right? But do you know what to look for? Yes, that little nugget, right? That little shining in the black sand, so on and so forth, right? So when you know what you're looking for, things get easier. So let's go back to my spaghetti. Let me clear a couple of things out in here, right? Bear with me, bear with me, bear with me. I know I'm a bit slow, so sorry about that. Oh, come on, there we go. but it'll be worth it, I promise. All right, I think that's it, right? At this point, we are building up on, remember, high. What is this? What's this? This is a what? A what high? Lower, exactly, lower high, right? And then now we can do our very first trend line. Should we be updating this one? Yes, as time goes by, right? So, question: what are we looking for to long this? What are we looking for to long that? Looking for support, great. Yes, first looking for that support. Stop falling, right? So that makes a double bottom, exactly. Break the trend line, exactly. You guys nailed it. You guys nailed it. Perfect. So break up the neck on the trend line, and then what? It's not about the breakout. It's about the what? It's about the what? It's about the retest. Yes, and then who got it? Block group. Yes, and then above the zero line on the oscillator. You nailed it. You know what you're looking for. So, do you need to know the future to know when to enter? Let me know. I love you too, my friend. I love you too. So, do you need to know the future to know when to enter? I just need to know what the price of gold will be tomorrow. Oh man, I got crystal balls, but I'm not that good though. Inside joke, inside joke. Well, that'd be nice. That'll be very, very nice, my friend. But we're not there yet. We're not there yet. I'm not that good though. All right, guys. Does that clears the fog out? Does that clears the fog out? Profits, we're not profits. Exactly, Richie. You got this. Guys, we're looking for profits. We're not for profits. We're not profits. Exactly, Richie. My friend, what a good saying there. I got this stuff. Anyway, I get this stuff. Perfect. All right. Not just have a rough idea what looks like the support and let it write exactly. Perfect. All right. Let's move on into Q&A from the other classes. This is important also. We're going to be diving into a more technical stuff. So bear with me. This is also going to share some light. If it is too advanced, don't worry. Just take a couple of mental notes. And in the future, as things played out in the market, we'll also see that. All right. So let's go here into the class recordings right here. We have one of our classes from, where is it? November the 21st, all right? Gohila was asking here. And caveat here, and I want to bring this up, guys. I'm going to be answering in the best possible, in best of my abilities, right? That means I might be that uncomfortable guy that tells you a couple things that might sound rough, but that my intention is not to make it sound rough, but just to try to push it as clear as possible, if that makes sense. All right. Once I have said that, guys, oh, there we go. Joe's working code clue. Perfect. Yes, digital. I'm also gonna get into it because I think it's related. I think it's almost the same thing, isn't it? Digital. I'll get into it also. I tried to push it in today. So here it says, question, he said, Kohila, for November 28th, third class, perfect. What includes the prime oscillator? I'm going to get to it into a second. Comparing to the RSI, the prime oscillator looks similar to the RSI. That's because it does include, it bakes in part of or a modified version of the RSI to give better performance to the momentum calculation. That also gives us, because not just looking at RSI, right, but also adding a couple of other smoothing factors or adding factors like money flow, volume, so on and so forth. I mean, the things that we add, we also refine the outcome or average down the outcome of this, all right, of the partial RSI calculation, if that makes sense. But what else does it include? All right, I just mentioned it, right? Perfect. Also, I'll show you what else does the oscillator has it within it. All right, as extra indicators. If I look the area side, the greens in this green circle. All right, if I look the area side in the green circle, uh, I don't see bearish divergence until they're at the very end. All right. But the prime oscillator starts showing bearish divergences at the start of the green circle. Shows a multiple bearish divergences. My question is, what is causing the prime oscillator to show bearish divergence and when the RSI was not showing it? Is this a scenario where the prime oscillator is not accurate as the RSI? All right, let's get started here. And this is my first, please don't take it the wrong way, please, all right? And I'm gonna explain into it, but if you want the RSI, use the RSI, right? Do not use the prime oscillator, right? The point in here is that you use the indicator that makes the most sense to you. Now, explaining on this, all right? I'm not pushing out of the, I'm not pushing you out of using our indicators. We have a baked in partial code of the area side, and then we try to make it better. My perspective, well, not my perspective, the point of view of this coding was, can we catch divergences earlier than the RSI? The answer was yes. Not only we can do that, now we can adjust what kind of divergences you like to trade on. So we not only were able to sooner detect the divergences, which in our purpose, all right, makes it a better result because that's what we were looking for, but also give you the ability to replicate, overcome, or undercome what you got on your error side. All right. Also, once again, please do not take this the wrong way. And I'm gonna be it looks at the error side in the green circle does not bearish divergence until the very end. All right. This shows, please don't take this the wrong way, right? I'm trying to explain the clearest that I can. This shows a lack of understanding on how divergence work. Just a divergence definition, right? How divergence work and how divergence on RSI work. All right, let me clear this up. In this class, I'm not gonna be taking or explaining RSI itself. There are like 1,000 videos out there, right? And instead of just replicating what is out there, which is very good, we'll try just to cover the basics so you can go and watch, educate yourself in that other video, and then come with the complex questions that you did not get an answer out there, if that makes sense, all right? Just to make sure that we can cover more in less, all right, in less time. So usually, just to simplify things to the very minimum, a divergence is when the action of your oscillator, it is going the opposite way as your price action, right? Why? Because its name tells you it is, instead of moving parallel, they are diverging from one each other, right? Diverging lines are like, for example, megaphones, right? They are lines that if you prolong them, they get the endpoints, they get farther and farther and farther each other, right? Does that make sense? Just want to know that. I want to know that. Uh, Back up. Yes, perfect. Thank you, Dagat DT. Perfect. All right. So now that we understand the basics of a divergence, you can have something that I used to use before. For example, the come on, I just forgot the name of it. It is called the squeeze momentum indicator by Lazy Beer, right? That was one of my favorite tools before I found Chart Prime. Yes, because I was a Chart Prime user before I get to be the master instructor. So the divergences that that oscillator finds are more in line of what my brain sees as a divergence or that my brain gets better results from. Also, if I compare the RSI divergences from the MACD divergences or the squeeze momentum indicator divergences, they are different. So there's many ways to answer this question. One of those is different oscillators give you different divergences, and you should be picking the ones that make the most sense to you where you want to trade them. All right. So the next question, and let's take a look at this, or the next possible scenario, it is do not run away looking everywhere for divergence. We got it fixed for you. And that is the divergence sensitivity, right? So, for example, let's go over this example here. This is a high, right? And this is another high. Well, bearish divergence price should be, or price is about to go lower, right? So if we take a look at here, the highs, we're having a divergence because we are also grabbing this point in here. So what's happening from here to here, right? You see that price diverging, right? What is the other price diverging here? Look at that. Low, higher low. And from here, we got low, lower low. It is diverging. You see? So just to not overcomplicate stuff, any line below the zero line, it is a bullish divergence. Green for usual, normal, regular bullish divergence, which are the one that I like the most. Yellow, it is for hidden divergences, right? Valleys within valleys or highs within highs, all right? And then at the top, red for regular divergence, orange for hidden divergences, all right? And then blue, regardless if they're up or down, blue is multiple divergence. Blue means it is not a separate divergence. It's a divergence that connects directly with the next divergence, making it stronger. All right? So, once again, just following the same methodology. Blue divergence at the top, that means it's bearish. Blue divergence at the bottom means that is a bullish divergence, right? So far, so clear, so good. Any questions so far? Please let me know. Yes, it's being recorded, lucky deal. Perfect. All right. So I hopefully have resolved this. So why does the RSI is not detecting divergence? Because the RSI, I would say it's not sensitive enough. All right. Because you can see this low, this higher low, and the price action did move. And we don't have it. So I would say, come on, RSI, you're better than this, right? But I don't know. That's why I would say in this case, I think it's a clear how it shows how clearly our indicator works the best. Now, if you don't like it, that's fine. That's perfectly fine. You like it better, like maybe the RSI, right? Let's do it the RSI way, or let's just change it to matches the best RSI. How do you do that? Well, then you will have to go to your indicator here. Let's just get this out of the way so we don't get confused. Let's also add the RSI, right? Here we go. Let's just clear this up. Oh, come on, I added the wrong one. Sorry. I also love this one, by the way. RSI. So, now, come on. Come on. Why I'm not having it? There we go. Relative index. All right, good enough with this RSI. Remember that you can also change the RSI smoothing factor right here. Again, I'm not going to be teaching this because this is being taught on other classes, right? So, but let's just say that you are finding a couple of areas of divergences here, right? What you do is you go to your prime oscillator pro, all right? And then you go to max distance between points. So this means how big, how much separation between points there needs to be for a divergence to plot in candles. 35 candles. This will give you maybe from here to here, this is a 35 candle, right? Maybe if you want it larger, well, you can put on, I don't know, 60 candles, right? So you will have larger divergences being found, all right? And then you just go here, back in here, and change it. Minimum distance between points, that's 2, right? That gives you tiny itty bitty divergences, right? Like, let me try to find, there we go. 2 candle divergence, right? Maybe to me, that's, to be honest, this is not something I'm going to be looking at. This divergence is too small that for me, the result is not giving me anything of value, right? That's for me. For you, might be a different case. So what I'm going to be doing here is, for example, just to get rid of this kind of small divergences, I can do maybe 5 in here, right? Let's just give it a wait. Let's give it a second for the for the eye to stop moving. And oh, it seems like it was a larger divergence here. So let's do, I don't know, 6. There we go. Now you can see this one is gone. Let me show you that once again. There you go. Now it's back. Let me change it once again. Now it's gone. You see that one? All right, perfect. So I think that clears that part up, right? So you can adjust the size of the divergence to match your style, right? So how do you match your style? Well, what you want to do, and that is all. This is all something that I cannot do for you. This is only because I cannot be on your brain and see exactly or in feel what you want to feel and see what you want, what that you're seeing, right? So this is completely onto you. So you need to go and take a look at your price action. And you want to start seeing when we drop, when we drop, when we drop, and then you start pairing it with divergences, right? With those divergences. So then maybe, all right, this one, oh, look at that. This one dropped pretty nicely, right? Look at that. And then this one reacted also pretty nicely, right? Look at that. I like the default things because that gives me the same amount of distance that I'm looking for a divergence reaction, right? Which is scalping between the daily or the 4 hours, right? But maybe you just want bigger things, right? So in that case, once again, you just crank this one up, and then the reaction of the divergence that you're gonna have are gonna be bigger reactions. All right. So hopefully that also clears that up. Just thinking Bull Scout with their horns. Oh man. Oh, I was not looking at it. All right. Let's just try to wrap things up in here. All right, I think I have gone over all of this. I also have a request. Digitas, you also point out one of those. Let me bring it up. Oh, 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 oh. Give me just 1 second because it opened up in another one. Copy link, paste. And I think this is gonna be important, guys. I need you guys to stay with me here. 1 second. Oh. 1 second, please. 1 second. Bear with me here. Promise those are not video games. All right. Oh, come on. Did not play it out? All right, perfect. Did I hang up? No, all right, perfect. Here's a couple of things that I want to point out because this was just wondering if the code could be improved for Oscillator Pro, all right? Guys, we love for your suggestions. But this a little bit, we, like, all right, if I read the outpost here, I can maybe try to understand this, but this is also implying that the code is wrong or faulty, right? Which could be, right? I'm not shielding the code, but we need a little bit more of this. Like for example, this is going to a football game, and telling, I don't know, the cornerback, hey, I need you to step up your game. Sure, we can do that, but what you got in mind, right? So we need for the proof to be, so the code to be improved. Perfect, great. We can work on that. How exactly, right? I mean, I don't need you to tell me the code, but I need you to tell me more specifics on it, right? This is the same thing. I'm not pro. All right, whatever. BC was going up during its whole time. I thought BC will be correct given its multiple divergence. Remember that divergence are not telling you, hey, we are gonna be correcting, especially, and I talked about this into the divergence class. And let's have a look at this. A divergence, remember what I always tell you, if you're looking at one single indicator, you're doing it wrong because you're ignoring everything else. So a divergence just adds the possibility of a correction. Guys, what is a correction? Or how many kinds of corrections do we got? If you have the answer, let me know. I'll give you extra kudos. Exactly. Thank you for that, Don. Detail. Confluence. Exactly. Change on momentum and direction. Yes, or almost there. Very close. So there's two kinds of correction. Correcting, I mean, the ones that you get quantum, those are what causes that correction. Very close, right? But a correction, it is a movement on price action, right? So price trickling down, that is a price correction, or correction in time. What does that mean? Correction in times means that the price is not going anywhere, but the time is ticking. And then we either explode to the upside or explode to the downside, right? That exactly. So sideways. So this is correction in time. Sorry, correction in price. This is correction in time. All right. For example, usually these kind of ranges, which are a mixture between range, I call them slightly tilted ranges, right? So those ranges are because of the momentum that we're having. We are correcting both slightly in price action because I mean at the end of it all, it wasn't that big of a deal for a daily. All right, it wasn't that big of a deal for a daily, but times wise, whew, that felt like infinite time, right? So exactly, consolidation. Yeah, consolidation needs a correction. Yeah, consolidation. Remember that consolidation is the same as ranging. We have consolidation down, we have consolidation sideways, and we have consolidation up, right? So which is slightly tilted range, flat range, and slightly tilted up range, right? Does that make sense? All of these three are consolidation, right? Which are correction in time. Perfect. Roger that. Perfect. All right. Let me clear this up because this is my best chart so far. All right. So now that we understand what is a correction, well then let's try to catch those divergences. Because also remember what is a divergence telling you? Divergence is telling you there's a disparity, a diverging momentum or diverging not momentum, diverging action. I think that will be much more accurate, right? Between what's happening with the price and what's happening with your oscillator. It is not talking about what is your oscillator changing or measuring, right? In our case, our oscillator, not all of it, but the ribbon, right? The ribbon measures momentum. Momentum in physics equals, and I'm not going to be precise in here so everybody can follow up along. It is mass times what? Speed, right? Yeah, velocity. But this is just because I like to be a nerd. Velocity is not a constant. It's an acceleration, right? So yes, but yeah, that's why this is not accurate. We also need to do that. But yeah, it's a delta. Exactly. There you go. Quantum. Love it, my friend. It gets me excited. All right. So let's also ignore that for a second. But let's just translate this to what trading is, right? If we're talking about mass, we're talking usually because mass in Earth also represents almost at the same as volume, almost depending on, of course, of the metal. But if I do not change the product, when I add mass to it, it will get massive, right? Does that make sense? So it will get bigger, right? So what mass could that be? Mass equals, anyone guesses? There is a crystal ball. Yeah, I'm a mom actually. Oh, you're a mom. Oh, great. Didn't know that. Oh, thank you for clarifying. I know you're busy after the sale. I'm wondering if you have to anything to get the upgrade from. Please go over to the get help channel. Ask for a ticket, and we'll make it happen. We'll look on what's going on and fix it right away. All right. TCL3, yes, you're very close. You're very close, but also there's something more missing there. Everything is money, right? I know, but the way that that money flows in or out, like for example, in this case, mass indicates how much value. In this case, because we're talking about USD, it is money. How much value does it accumulate? Equals volume. All right, equals volume or equals market cap, whichever you like the best, right? Wait, volume. There you go with Rigi, the veteran coming in here, absolutely right. And speed, which is also maybe acceleration, velocity, whatever, right? How does that could be interpreted? It might be easier than you think. That could be interpreted. Let me see. Come on, push enter, guys, push enter. I want to read you. Momentum. There you go, vertical. Yes, momentum. What? Well, momentum or man, I got that wrong. Yes, momentum because that's the result of it, right? But speed, it is money flow because the money flow measures how fast, small amount or a big amount, regardless, but how fast that money is going to the asset, right? So that will be very close there, quantum twilight, very close, right? So that will be volume times money flow, right? Yeah, but time will be the x and y variables, which right now it's price action over time, right? So or price value over time, yeah. But you're right, TS1, yes, that's also needs to be taken into consideration, right? That's a physics definition. Exactly. Yes, you are right. Yes, exactly. Perfect. So we got the idea clear, right? So momentum, right, equals in this case for trading equals volume times money flow, right? Guys, remember that these are equations, right? So you can change this and still have some sort of momentum-ish value, all right? So this is not exactly like physics. This is not set in stone, all right? But it's just work behind it, right? Or kind of like just to understand this, right? That's like the things to be fair. Yep. All right. Almost said cash flow. That would have been amazing. That would have been amazing, Quantum Fly Lake. All right. So now that we understand what our oscillator give us, all right, what is measuring our oscillator, it's measuring momentum. Now we understand that we are measuring the relationship between money flow, which is very fast, and volume, which is usually slow but steady, right? Or powerful, right? If that makes sense. But slow, why? Because once you have the momentum bar in here, like you see that, remember the momentum indicator, the classical momentum indicator, once you see the big bar, it's already gone. The movement was gone, right? Yes, it told you that we have momentum, but come on, could you tell me before? Yes, but what could have told you before? Money flow, but money flow is a little unstable. So if we match them together, we have a more average equation. Does that make sense? So in this case, average is not equal bad, but equal better, if that makes sense. It gives you a better distribution curve. All right. Too much. technicals. Let's just go into in depth in here. Bullish. Let's go to the bullish scenario on the previous. Let's go to daily. Yeah, I think daily. Come on with my. All right, guys. So sorry for this. I mean, I need to work into my charts. All right, you know what? Let's go to a cleaner one. Sorry. That's why it's called Mexican spaghetti, guys. Just in case you did not know. All right. This much better, much better. All right. Look at how many divergences we had, and look at the overall movement of the price. Why? Because this movement, it was a pump, slightly tilted channel, pump, slightly tilted channel, pump, somewhat a channel, right? Because there we go. You see that? So we're having correction over time. OC is the king of spaghetti. Yes, I am. I am. Not specifically a bull flag, because a bull flag, by definition, usually a bull flag or the better version of bull flag, it is slightly turning down. It's a flag slightly. Why is it more powerful? Because it's retracing in both ways, slightly on price and also slightly on time. Because at the end of it all, it's making a slightly tilted downward range. If that makes sense, it's not a full trend, right? But it's a trend within a trend. So I know there's some blur lines in between definitions. But yeah, because you are implementing both ways of correction, that's why bull flag usually is defined as a bull flag, because its weight of bursting is higher, or it is expected to be more dramatic, if that makes sense. All right, so this is what happens all on bull runs. You see corrections, corrections, and corrections, but the damn thing does not correct, right? So that's why every single time we start seeing this, we call for correction equals ranging or dropping, right? So Gohila, to answer to your question, I think this is the part that you might be missing. All right. You are just considering the correction being on price action, right? So you see the bear the oh come on, the divergence, and you are expecting only to see half of the story, right? So you need to also include in that equation, or what is happening on what you're expecting to, the time, the over time. So when we are into a neutral or over time correction, and you see tiny things, like for example, this gets a little complicated, but bear with me. For example, right here, bear correction or bearish, and did it correct it slightly, but we never actually lost the range, right? The range, it's our, in this case, it's our measurement. And a range, it's unknown. We don't know where it's going to be breaking. That's why we buy low, sell high, buy low, sell high, and keep 50% of each one. Does that make sense? So if it breaks up, it takes you out on your short, which is fine, because you already have taken profits on this short, and any other short that you have taken, right? But you keep making money, you're compensated and multiply on your long, right? So that's a little bit of but that's another strategy, complete strategy that I have built up from scratch. But if we take a look at this area, and let me see if I can, if I don't know if I'll be able to find it. All right, let's do a closer one. Perfect. All right. The same thing happens here. You see that? Bearish divergence, slightly tilted range, right? It's not a bull flag. We'll still have enough momentum to keep pushing, and the price going up and the momentum going down, that's what makes the definition of a divergence, right? So did we correct it over time or over price? One or two? And I know the next question is exactly one. The next question is, how could I know? You don't. You now let's go back to the beginning of the class. This is what I call back for the beginning of the class, right? Remember I told you simple enough, simple enough, simple enough, right? At this point, you see it going up. You see right here, let's just think going up, that momentum dropping, price keeps going up. Yes, it has its things. You know a divergence is forming. Even if the divergence is not there yet. Guys, give me 1 second, please. Something important. Bueno. All right, very sorry about that. We have going over 30 minutes, and usually I don't get a call of my wife at this time, so I thought something urgent was going on. Sorry about this. All right. So what we do if we don't know? We already know what we're expecting. We're expecting what? One of two things. Can you tell me what are we expecting at this point? Sorry, ladies. I love it, my friend. Love it. So what are we expecting at this point? We're expecting, right, when we start seeing the divergence, we're expecting price to do what? Now that we know the two solutions, what is it? Go down, exactly, that's one, or so sideways. Yes, sideways, exactly. Yeah, correction over time. There you go. Yeah, that's a better definition. Yeah. Correction over time, which is usually sideways, slightly tilted up, slightly tilted down, flat, doesn't matter, right? So let's see what we got there. Huge divergence, huge range, correction over time sideways. You see that? So how do you trade this? And this is what things get not complicated, but this is where you leverage the power of going to multi-time frame. If I know that I'm gonna be ranging, I what I do in ranges, what I do in ranges, I buy, I buy, I buy where? Deeps. Oh man, this is not updating. Sorry, one of my things is not updating. I see your answers here, not here. Sorry about that. Yeah, I buy low. Exactly. You sell high. Yeah, you buy deeps. Exactly. There you go. Yeah. So for me, this is to few candles. Let's make a big AF thing here so I can find it on the 4 hours, right? So let me go to the 4 hours. This is not it. This is not it. We're searching for the big AF. There we go. This is it, right? This is it. So now I can zoom in and I do have enough candles. Remember what we learned at the beginning? Trend lines, my friend, trend lines, trend lines, trend lines, trend lines, right? What I do, high, low, lower, low. Oh, what I can do here, trend line, right? What am I expecting? Base or support, high or low. It's not about the what, it's about the what. And where is your entry? Exactly. It's not about the breakout, it's about the retest. And there you go. And boom shakalaka, right? And boom shakalaka.
You heard it here first. Bitcoin is going to zero.
So when everybody's just running away because man, this is going to hell, right? We're waiting. There you go. Yeah, that's where it came from because I drill your brains out with this. It's not about the breakout, it's about the retest. Yes, that's what the OC retest thing came from. Very honored to to be known in the space like that. But yes, so what you do, and look at that, I went from daily to 4 hours, right? You can do the same from 15 minutes to 5 minutes, right? You can do the same from 5 minutes to 1 minute, right? It's just about simple stuff, simple stuff, simple stuff. Uh, Hopefully that clears out many things about divergences, how we tied everything together, starting from what was it? I mean, guys, how many indicators we looked at? We looked at for the divergence, right? Then we look for the range. Then we look for the lower time frame. We look for the oscillator, right? And then we look for the trend line. That's it. Easy peasy, lemon squeezy, right? Not entanglement, no stress, no anything. And we just also proved that in today's analysis, right? What are we waiting for what was it? Gold ETF, right? Gold ETF. We're waiting for support, stop falling. We're waiting for breakout, retest, flip of the rebound, break the zero line, and off we go to the moon, right? Cha-ching, exactly, exactly. And I do have that one. Cha-ching. Perfect. Guys, we have been going over for almost half an hour more. That's because I was late to the class. I need to run. We're gonna keep doing this on advanced classes. Usually, advanced classes, I'm trying to reserve them for the back tester and analysis breakdown. But I'm also going to be going to the classes back and forth to answer all of those questions that I know. And Gohila, keep coming those questions, my friend. Please, I appreciate you taking the time to learn. You know how much you know how much respect I got for you, my friend, because you keep pushing it, pushing it, pushing to the limit, and that's what it's all about, right? I mean, that hunger for knowledge, that hunger for improving, that is hard to find, and you got it. So I trust that you're gonna do great things in life, on at least in trading. So, guys, also that's what the answer. Sorry, that's why the question section is here for, to push it. You already paid for it, right? Make me work for you. Squeeze it to the best. Squeeze my best for you guys. I'm always trying to be as friendly as possible, but sometimes I will have to tell you, you know what? Bear with me. But this is it, and this is the other thing, right? So my goal is to bring light of what I can, right? I don't have all of the answers, but I do my best, and if I don't have them, I study them, and then I bring with the answer to you guys. All right, clock, crypto boyo, my friend, what's up, guys? Time to wrap it up. Thank you so much for joining, and as always, see you guys. You know the rest tomorrow.